the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take a look at how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as usual, a quick recap of how we started. Well, Singapore shares began the day in the red, tracking losses in global markets last Friday. So in early trade, the Straits Times Index was down 0.3% at 3,790 points after nearly 37 million securities changed hands in the broader market. Now let's take you through the closing numbers. The STI ended in the red as well, down 0.26% at 3,791 points. In terms of value turnover, we are looking at 1 billion Sing dollars. Now gainers trailed losers. We're looking at 193 gainers versus 349 losers. Now, top advances for today, we've got here BRC Asia, GMH USD, and Jardine Cycle and Carriage. Top decliners for the day, we've got here Shangri-La Hong Kong Dollars, OCBC Bank, and Venture Corp. Now, in terms of companies to watch for today, we do have Stoneweg E-Reit after it received a BBB- long-term issuer credit rating from S&P Global Ratings, and that's on the expectation of stable operational performance and cash flow over the next 2 years. Now, aside from that, we've got more China trade surplus numbers. We've also got how TSMC is expected to report a 58% jump in Q4 profits on Thursday. So that's on focus today. And also on deck, a look ahead to the US banking sector with industry giants set to report midweek. Joining me on the line on a Monday is Chin Hui Leong, co-founder of the Smart Investor. So let's find out more from Chin. Chin, welcome.
Hi, everyone.
Great to have you on board. And Chin, let's start with the Singapore stock market as usual. How did the STI fare today given that unexpected jump in US non-farm payrolls for December? I believe we were just expecting some 150,000, 160,000 job increases, but the actual numbers came in at a staggering 256,000 jobs. How would you assess the shock waves sent through markets and movements on STI today?
Yep. So last Saturday, right, I came across this headline which said U.S. stocks plunged on solid jobs report. And I couldn't help to be amused by the irony of this title because how can good news
become bad news?
Is interpreted as bad news in the stock market, right? And I was so amused that I decided to write an article on it, and you'll see it on Wednesday at Business Time.
Okay.
But here's the gist of what I think, right? I think market commentators at the moment are trying too hard to explain the connection between the jobs report and the stock market reaction, right? I think they're just twisting themselves into a pretzel to justify and say that a strong jobs report means slower interest rate cuts. So let's take a look at that for a moment, right? And sure, slower interest rates cut technically should be better for banks and less good for REITs. But if you look at the stock market in Singapore, coming back to our local stock market, right, you won't be able to tell since all the banks are down today and all the REITs are either down or unchanged for the day. So there's no real connection here. So I'm not really understanding why people are sort of like twisting themselves and bending over backwards trying to find a connection.
I see. Anyway, a couple of years ago when we're looking at the numbers, sometimes too hot numbers, not good news for markets. But if we are seeing a big dip, then there are questions over the health of the economy as well. So either way, it seems like there's no situation that we can win.
However you want, really.
Yeah, exactly. Okay, let's talk about the movers today. We've seen some news relating to Stoneweg E-Reit. It received a BBB- long-term issuer credit rating from S&P Global Ratings. Any surprises when it comes to Stoneweg E-Reit and also the other biggest movers on the STI?
Yep. So what I did was I went to take a look at what a BBB- means. And in the S&P ratings world, broadly speaking, there's two types of investment sort of like credit risk grades. One would be the investment grade. The second one would be the speculative grade, right? So the names of the two grades are self-explanatory. So the BBB- is inside the investment grade, but it is actually the lowest among all the grades possible. So in should I say in Singapore exam terms, they got a passing mark, right?
Okay.
And for Stoneweg European REIT, right? I'm just going to call them CERT. Mm-hmm. I think the commentary from S&P is interesting, and I want to point out one of the commentary, which I think explains a lot why they got this passing grade. So what S&P said is that the REIT has expanded into the logistic and industrial sector since 2022, right? And they have been divesting their non-core assets. And this is true because the latest results show that 55% of their assets is in the L&I sector right now, which is deemed to be much more stable. And at the same time, they also mentioned that reducing office exposure, which is what they still have, is a good thing because there are structural changes in office demand. And I think this speaks to the ongoing challenges they have on the office side. So what does this all mean for investors in the end, right? Because I think investors will be looking at how this BBB minus grade will translate into lower financing costs, right? Because if we look at their second quarter results, their all-in interest rate is actually down, but their interest rate expenses has actually risen, and that has caused the distribution or distributable income to fall, right? And I think if I'm a unit holder or investor, I'll be looking on how this new grade will result in lower interest rates and therefore higher DPU, because I think that's what investors want.
If we look at the units of Stoneweg E-Reit denominated in euros, of course, that's down 1.258% for today. And aside from that, Chin, the other counter that we have on our list for today is Grand Venture Technology, which is a manufacturing services provider. It is partnering with Singapore's A-Star to develop a customized manufacturing platform for advanced ceramics. How significant is this looking at Grand Venture Tech's share price movements? Because shares were down quite a bit by 2.395%.
So when I looked at the Grand Venture Technologies announcement, they didn't really say how this technology will actually be applied to their current business, right? It's a little bit vague in that sense. But just looking at the technology, which is customized manufacturing for advanced ceramics, I happen to have a mechanical engineering degree, so let me put that to use, right? So I think ceramics have a high thermal capacity, so it can absorb large amounts of heat. And I think this could be a good fit for two of its businesses, which is semiconductor, which chips tend to generate a lot of heat, and also for aerospace. But then again, this news is mainly about a R&D collaboration, so it's too early to say how this will actually translate to actual business for a Grand Venture.
Now, if you're just tuning in, we're now in conversation with Chin Hui Leong, co-founder at The Smart Investor. Well, Chin, across the region, China's trade surplus soared to a record last year. Companies rushing to get their goods out of the door ahead of U.S. President-elect Donald Trump's return to the White House. Now, according to a statement from the Customs Administration out today, we are looking at an unprecedented surplus of $992 billion in 2024. Could this be one of the last high points for China trade? And are there any other pockets of growth that could bolster China's trade numbers as we enter 2025?
Yeah, so I think earlier, before the session itself, you did mention that Trump is looking to increase tariffs by even more, right? And the fact is that Biden has actually embraced Trump's tariffs, and yet, despite the increase in tariffs, and just in September, for example, he increased the tariffs for EVs or electric vehicles by 100%, right? For solar cells, it was 50%. And for EV batteries, it was 25%. So there have been increases in the Biden era as well. And yet, today we see the, record high tariff or trade deficit, right? So it does bring to questions whether or not these tariffs actually work and what will actually happen, because it doesn't seem to have an effect during the Biden era. So I don't know whether, what Trump can do to actually change this trajectory.
Okay. Now, further away, Chin, let's talk about chips. Taiwan Semiconductor Manufacturing Company, it is expected to report a 58% jump or leap in Q4 profit on Thursday because of surging demand. So if we're looking at an LSEG Smart estimate drawn from 22 analysts, the profits we're looking at, net profits we're looking at or expecting here is 377.95 billion new Taiwanese dollars, around 11.4 billion USD for the quarter ended December. What are you expecting on this front?
Yeah, so what we actually do know is that TSMC actually reports their revenue every month, right? So in October, it was a 29% year-on-year increase. November was 34%, and December is 58%. So if you tally it all up, the overall increase for the fourth quarter is going to be 39%. Now, that's the top line. Now, for the bottom line itself, it really depends on how much or how TSMC is able to leverage on its operations and generate, high growth for its net profit. Now, historically, it's grown both its gross margins and operating margins over time. So I think that's why analysts are projecting a faster growth in profits compared to its revenue, which is 39%.
Now, finally, before we let you go, Chin, I've got about 2 minutes to go. This week sees some of the biggest banks in the U.S. reporting. We're looking at JP Morgan Chase, Goldman Sachs, Citigroup, Morgan Stanley, Bank of America. How do you expect the banks to fare this time around? And the second part of the question is that how far can their results be a proxy of the road ahead, especially given that on Wednesday we'll see some new incoming inflation numbers out of the U.S.?
Yeah, so I have to make a confession because I don't always look at U.S. banks.
Yeah.
And the reason, which is really important, the reason why I don't look at U.S. banks is because I happen to think there are 3 wonderful local banks which you can invest in with better dividend yields as well. But okay, let's indulge on this question and let's look at JP Morgan, for example, right? At the core, I came in thinking that the business will be similar to what the Singapore banks are experiencing, right? And I believe I'm on the right track because banks, as I mentioned last week, they have 2 parts of their business: the net interest income, and then which is their borrowing business, how they earn money from lending out money, and the non-net interest income, right? So we can see that from 2021 to 2024, the net interest income has increased from 53 billion, and they're expecting 2024 to be 92.5. So that's a huge increase. But on the other hand, the increase has actually slowed because in 2023, they actually made 90 billion in their net interest income. So 90 billion to 92.5 is a minor increase. And I think that moving forward, the non-net interest income will have to do the heavy lifting. The only problem is since 2021, non-net interest income has not grown much. So I'll be curious to know how the banks can actually grow this part of their business, because I think the net interest income portion may not be doing the heavy lifting moving ahead.
I see lots to watch indeed. Thanks so much for the insights, Chin. As always, that was Chin Hui Leong, co-founder at The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.